Good morning, everyone. Today is Thursday, the 18th of March, and this is the Vetiva breakfast meeting brought to you by Vetiva Capital Management in partnership with Frontier Africa Report. Before we begin, I'd like to remind everyone that this meeting is being recorded and may be shared with third parties, as well as being broadcast live on Facebook. The presentation is scheduled to last for 30 minutes, that is inclusive of Q&A. However, if due to time constraints, we are unable to answer all of your questions today, please feel free to forward them to research@vetiva.com and we'll get back to you as quickly as possible. Today, we'll be hearing from our equity and fixed income traders and from our partners at Frontier Africa Report. We'll start with Emmanuel Adeoye, our equity trader on the West African market and the Nigerian equity market. Good morning, Emmanuel.
Good morning, Joshua, and good morning, everybody. Starting off with the West African region, compared to the upward movement we saw in the previous session, where our three indices closed in the green. Yesterday, we saw a trend reversal where just the BRVM stock exchange closed as the long gainer, posting a gain of 40 basis points, and that reduced its year-to-date loss to negative 4.24%. Whereas looking at the Nigerian stock exchange as well as the Ghana stock exchange, we saw a decline of 4 basis points and 16 basis points each. The Nigerian equity market lost 4 basis points and its year-to-date return closed at negative 3.89%. While for the Ghana stock exchange, we saw a 16 basis point drop as well. And the year-to-date return of the region, however, remained positive at 14.50% year-to-date. For the Nigerian equity market now, the market could not hold on to the upward movement or the positive close recorded in the previous session. We didn't see much upward movement in any of the large cap stocks yesterday except Seplat, which advanced 92 basis points at the end of the day, but that was not sufficient to eliminate the effect of losses in the banking and the insurance sectors. For the banking stock, we saw continued pressure in that region yesterday. Again, we had the likes of Fidelity Bank, Guarantee, and First Bank of Nigeria closing yesterday's session in the red. And as a result, the sector lost 42 basis points at the end of yesterday's session. Guarantee closed lower at 28 Naira from the 28 Naira 50 kobo you opened in the previous session. That was about 175 basis points lower than its opening price. Whereas First Bank also closed lower at 7.27 Naira 20 kobo from 7 Naira 30 kobo it closed in the previous session. Among the tier 2 regions too, we saw declines in the likes of FCMB, Fidelity, and Wema Bank, and the pressure continued in the banking space again yesterday, despite the fact that the sector is the most lucrative in terms of dividend payments. Talking about gainers for yesterday, we saw the oil and gas sector advancing 1.27% to close as the lone advancer in yesterday's session. And this came on the back of the upward movement in two stocks in that region, talking about Oando as well as Seplat. Oando gained 967 basis points yesterday to close at its intraday maximum price of 3 Naira 29 kobo from the 3 Naira opened in the previous session. Whereas, as earlier mentioned, Seplat also improved marginally by 92 basis points to close at 515 Naira from 545 it opened in the previous session. With not so much activities, we saw market activities slowing down a bit in yesterday's session. Total volume traded declined by 19% to 177 million units. Whereas total value also dipped to 2.6 billion naira. That was about 37% drop from where it closed the previous session. And among the gainers, we had Guarantee, Zenith Bank, and Seplat closing as the top traded stocks by value. Talking about market breadth, saw an improvement from the negative close we saw in the previous session. Market breadth for the day closed flat. We had a total of 12 gainers and 12 decliners. So on the back of that, there was an improved sentiment in yesterday's session, but that didn't show in the all-share index where the ASI closed yesterday's session in the red. Going into today's session, we do not see anything changing as well. We still expect some mixed trading activities bargain hunting or cherry picking activities in some counters due to low prices and cheap valuations. But I mean, again, looking at sectoral performances and other major economic indicators as a whole, we still believe the market will remain pressured in the short term, and that I will believe that should filter into today's session as well. Or should you not see any significant upward movement in large cap stocks, like we saw in some previous session where the market closed in the green, then we should just expect the market to maintain its negative close into this session. Given that we've seen declines in the banking sector so far this week, we see the possibility of some of the tier one banking stocks closing in the green, spurred by bargain hunting activities on some of these counters. That'll be it for us this morning. Thank you very much.
Thank you very much, Emmanuel. Next, we'll be hearing from our fixed income trader, Omorigi. Good morning, Omorigi.
Good morning. Good morning, everybody. Okay, I'll start with the money market. There was no official system liquidity figures for yesterday. So our estimate is that system opened around 250 billion positive. And this marginal improvement from the 195.5 billion recorded on Tuesday was basically due to the coupon inflows that came in yesterday, about 62.3 billion. So despite improved system liquidity yesterday, money market rate tightened to trade around 12% to 15%, rather between 12% to 15%, coming from between 9% to 10% recorded on Tuesday. This was basically due to market participants making provision for the OMO auction that is happening today. So in spite of the OMO funding pressure that is expected to play out today, we expect that money market will trade at lower levels on the back of the FS retail reform that is also expected today. Moving on to the FS market, yesterday we witnessed a significant improvement in R&E industry turnover. Despite the improvement, the Naira maintained across all windows. The parallel market remained flat to trade at 485 Naira to $1. The R&E window traded at a high of 412 Naira to $1, closing at 409.75 Naira to $1. As earlier said, the industry turnover increased significantly to $148.54 million, coming from $32.33 million where it closed on Tuesday. So our expectation is the Naira will continue to trade at these levels, barring any significant supply of FS to the system or maybe a significant policy change by the regulator, that's the CBN. So moving on to the Treasury Bills market, as expected, the T-Bills market traded on a very lethargic note yesterday, with the NTB auction taking center stage. A lot of players decided to stay on the sidelines and wait for the NTB auction result, as that will set the tone for market activities in the subsequent trading sessions. We saw some players try to offload their recently won NTB one-year bill at above 6% levels, but there were no bids on that end, as players preferred to bid at the auction to buying in the secondary market. At the auction, the DMO sold a total of 62 billion, which is 15 billion more than the amount that was on offer. The total amount that was on offer was 47 billion. At the auction, as expected, the 91 days maintained to close at 2%. The total subscription on that end was about 6.7 billion. The amount on offer was 1.5 billion, and the total amount that was allotted was 2.5 billion. As also expected, the 182 days maintained to close at 3.5%. The total subscription on that end was 10.6 billion, while the amount on offer was 8.4 billion, and the total amount allotted was 5.9 billion. The 1 year improved by 50 basis points to close at 7%. So when we are giving our expectation on Wednesday, we said that we'll probably think that this 1 year will close at between 6.5 to 7%. So it closed at 7% as expected. The total subscription on that end was 99 billion, while the amount offered was 37 billion, and the total amount allotted was 53 billion. As I said earlier, the DMO allotted 15 billion more than what they offered. So in the previous auction, they also allotted 20 billion more than what they offer. This is beginning to paint a picture that moving forward, we should not just expect them to roll over everything that is on offer. They might as well increase the amount that they are allocating. So this will begin to give guidance on how people bid at the auction. Given that the amount on offer across the three tenors in this auction was not that significant, people were very cautious. That shows from the bid rate. People bidded around 1.8% for the 1 year. That's the lowest bid recorded for the 91 days, while the 364 days, the lowest bid recorded was about 5.99. People were extremely cautious. They didn't want to train ridiculous bid. So that's why rates still maintained, but the 1 year went up by about 50 basis points. So our expectation today is that we'll see sell-off on the NTB maturities in the light of the rate increase on the 1 year bill. And also we believe that the almost space should be very quiet as players gear up for the likely Omo auction that is expected to happen today. I'll conclude with the bonds market. In the bonds market, mixed sentiment filtered into the trading session, with buying interest skewed towards the short-dated maturities, especially the 2023 and the 2025 papers, while the longer end of the benchmark curve experienced bearishness with no bids to counter improved offer. On a side note, the DMO released the bond auction circular yesterday, confirming the next week bond auction with about 50 billion offered on the 2027, 2035, and the 2045 each. That brings the total amount on offer across the three tenors to 150 billion. The auction is slated for March 24th, 2021. So our expectation for today is that there will be an uptick in rates across the benchmark curve. So as market participants trade post-auction, that's the NTB auction sentiment. That'll be all for us. Thank you very much.
Thank you, Omorigi. Next, we'll go to our partner at Frontier Africa Report, Temple Asaji. Good morning, Temple.
Morning, all. We'll take off basically from East Africa, and we'll start off with the Kenya's Food Authority launching the new single window for traders. The platform aims to speed up the process for certifying licensees of trading in cash crops. Basically, trading in cash crops. The country had late last year or thereabouts, or mid last year, introduced an exchange to handle things like that. Then the other story for us will be Kenyan Cereals Board seeking some fresh 4 billion Kenyan shilling government funding to buy maize. So last week, the CEO had told the Senate in that country that they had spent some 860.5 million shillings, leaving a balance of 267 million shillings. Now they're in search of around 4 billion Kenyan shillings to be able to manage that sector of their country, of their economy. The updates indicates that government readiness to expand funding to that area. Kenya's Capital Market Authority also set July the 1st as deadline for coffee brokers to renew their licenses. And then this is a regulation that also came into play last year. It aims to get rid of cartels in the coffee business. Marketing agents intending to operate in that sector as coffee brokers at the Nairobi Coffee Exchange are expected to comply with the licensing rules. The Bank of Uganda bid worth some 430 billion shilling, accepting that within a three-year, 10-year bond period. This is an auction bid basically that is reopens to be able to manage their debts. The Accountant General had recently mentioned that their debt level, the debt to GDP level, is becoming too high and becoming unsustainable. But the government on its part is going ahead to raise some 430.2 billion Ugandan shilling under the 3-year and 10-year bond tenures. In West Africa, Italian courts that are taking some folks that are taking some key players in the oil and gas industry in Nigeria to Italian courts got a bit of a backlash yesterday. The Italian court says that Eni, Shell, and a couple of and their company executives are not guilty in the $1.3 billion oil drilling bribery. The prosecutors had accused the companies that the $1.3 billion dollars that they paid in 2011 for the licensing of the OPL 245 block went towards bribes for businessmen, middlemen, and Nigerian officials. And in particular, this relates to Danny Tete, the former oil minister who was convicted of some money laundering in a separate case. But the judge actually cleared these defendants of corruption charges or allegations. That was yesterday. And we all know that this had been a long-running battle and a long-running case over the 2011 oil deal. But the judge said he acquitted all the 15 defendants because a crime was not committed. In Ghana, Ghana is committing to some 2 billion Ghana cedis petroleum revenue losses, saying it's going to be fine. He's going to find a way to manage that. There's been some 2 billion cedis loss, Ghana cedis loss in tax revenue. And that's due to some sort of regulatory lapses and leakages. But government is saying that it's committed to blocking all these loopholes now and that it will manage all of the leakages that it has in it, and that's in the petroleum sector. For Cote d'Ivoire, Union Bank Cote d'Ivoire got some 5.2 billion CFA Islamic Fund for private sector. Then in South Africa, that the SA retail trade sales fell by 3.5% year on year. That's for January. And the month-on-month basis, that's compared to December, it was down by 1.6%. And we move to Botswana, where Tlu Energy is raising 2.6 million pounds to develop their Lesage project. Tlu Energy is a cleaner power generating company in Botswana and some other parts of Southern Africa. They're listed on the Botswana Stock Exchange. And the proceeds for this fund, which is coming on via a private placement, it's to be able to fund the construction of some 66 kilowatts transmission line in that country. They also to manage their field operating costs and then purchase some ancillary equipment. In Angola, the AFDB has granted them some $530 million for the electricity projects. It's another clean power project that they are running in that part of the country or in that part of the world. And in Namibia, government's pension fund assets reaches 132 billion Namibian dollars this month. The value of the fund had dipped to $108 billion Namibian dollars as at the end of March last year. But since management of COVID-19 has been revved up, it looks like they've been able to mitigate the risk around that particular fund. And finally, we look at another African headlines where Egyptian cabinet approved some $50 million financing deal for MSMEs. The cabinet approved the money of fund on Wednesday yesterday. Soft financing deal between Egypt and Kuwait Arab Fund for Economic and Social Development. And the deal is basically subjected to the endorsement of President El-Sisi. It is expected to contribute to the reduction of unemployment and increase in production generally across the retail sector. And EFG Hermes reports 1.3 billion Egyptian pounds profit. That was a strong result for them. Operating revenues was up at some 5.5 billion pounds, despite the challenging financial year. And this is the third consecutive year of posting higher revenues in that company. Egypt Insurance Authority is also looking to get some 180 billion pounds, that's Egyptian pounds, in debt payments plan. That will help them to repay their debts owed to some insurance funds, which has accumulated over a period of 50 years. Then we all know again that President El-Sisi recently approved a 13% increase in pensions effective from July this year. That's part of what this fund will be targeting. These are our main stories and headlines for today at Frontier Africa Reports. Thanks for listening.
Thank you very much, Temple. We have now reached the Q&A segment. If you have a question, you can message in the chat box or the Q&A box, or if you prefer to speak, you can raise your hand and you'll be allowed to speak. If you are joining us on Facebook, you can leave a comment in the comment section and we'll read out your question. It appears we have no questions or comments today, which means we have reached the end of the meeting. Thank you for joining us. We hope that you join us again tomorrow. We urge you to stay safe and enjoy the rest of your day. Good morning.